Ladies and gentlemen, what we have seen is first we saw Bitcoin drop about 37% from its recent all-time highs. And then we saw stocks like the Nasdaq index fall 21% into bear market territory. Then we saw bonds, which have traditionally been a safe haven asset. The TLT ETF has fallen 18% over the past year from its recent 52-week high. But the reason why you're clicking on this video and the next asset class to fall, which is the final asset that is still at all-time highs, yes, that's right, the next asset class to fall will be the housing market. And this video isn't to spread fear or FUD, fear, uncertainty, and doubt. This is to educate you because people, the data doesn't lie. And I have some news, facts, and data that shows and proves a housing market correction is just around the corner. We've all been waiting for it over the past year. The reason why it's been delayed is because central banks haven't been doing their job. They've been kicking the can down the road, but unfortunately, the road has come to an end with now the economy booming, with unemployment at record levels and inflation at all-time highs. There's no excuses now holding back central banks to start lifting mortgage rates, and we're also going to go over how inflation is absolutely decimating home builders and the construction sector, and builders and consumers are starting to tear up home building contracts. And just like what happened in China with Evergrande and a developer crisis there, we're about to see this in countries like the US and Australia as well. So everyone, we got so much to cover. Also thanks to FTX for sponsoring a part of this video, but more on that later. Okay, let's get into it. Okay, so what's going to be the first trigger for this housing market downturn is this, everyone. Look at this. 30-year fixed mortgage rates now climbed above 5%. And I'll get into later in the video how this is so huge. Because remember, in 2020, mortgage rates hit a low of 2.65%. So mortgage rates are almost double what they were. And this has been the fuel behind the housing market. But now this fuel is running out. So you're probably wondering, well, okay, what is this causing? This. Listen to this. Rising mortgage rates are causing more home sellers to lower their asking prices. Now, in general, how markets work is there is fear and there is greed, and there's FOMO, fear of missing out. Now, what has fueled this crazy housing market is there's been huge amounts of greed and there's been huge amounts of fear of missing out. House prices have been rising at their fastest pace on record, rising 20% year over year. But people, this is completely unsustainable. You've also seen people paying 20% above asking price just to secure a home. And if you're a bidder and you're offering $50,000 more than the home is worth, that could actually be the lowest bid out of 10. But the way market sentiment and market psychology works is it can change very, very quickly. And what I think is going to happen over the next few months is we're going to have FOMO of sellers, fear of not selling at the peak. Because the reason sellers haven't been putting their homes on the market is because record low inventory, and also they're probably thinking, well, I'll sell my house 6 months later and get a higher price. But once home buyers start to see that house prices have peaked and the asking offers are starting to come in lower, well, they're going to put their house on the market. Inventory is going to go up and you're going to see much more power go back to the buyers. Listen to this, about 12% of homes for sale had a price drop during the 4 weeks ending April 3rd. That's up from 9% from a year ago. The number of new listings last week also jumped 8% from a year ago, which is exactly what we need right now, according to realtor.com. This follows 4 straight weeks of annual decline in new listings, so we really need those listings to go up. And buyers are really starting to sweat and get priced out of the housing market, as like I said, mortgage rates are now above 5%. But it's not just this, we've got even bigger data and news to show you. Listen to this, everyone. Surging interest rates push mortgage demand down more than 40% from a year ago. And this is definitely going to be bad news for the banks that rely on refinances for a lot of their revenue. And how this can also affect the housing market is, say for example, if investors, they've got a 30-year fixed rate mortgage of 2.7%, and normally what would happen if they want to buy another investment property, well, they'd refinance, take the equity out and go buy another house. But maybe they don't want to refinance now because then their interest costs will double. And they may also think that, you know what, we're not going to have this crazy price appreciation. So you may start to see investors pull out the housing market as well. And yes, maybe even the hedge funds as well. Because the only reason hedge funds brought in 2020 was because they saw how prices were about to skyrocket. But if they think prices are going to fall, you better believe they're going to stop buying as well. Now, what many people are thinking is they're thinking, well, you know what, mortgage rates going from 2.7% to 5%, well, it's really only, you know, a 2.3, 2.4% rise. It's not much of a big deal. But guess what? In percentage terms, this is actually the fastest mortgage rates have gone up since 1980. Let's hit the charts. Look at this, everyone. This is change in relative interest rates on 30-year mortgages by Freddie Mac. Now we can see the previous record was in 1980 where mortgage rates rose 53%. And more recently we saw in 2016 to 2018 it rose at 44.9%, and we definitely saw house prices fall in California and New York back then. But look at this, look what's happening now from 2021 to 2022. Mortgage rates have increased 76%. We'll say, for example, if interest rates go from 2.5% to 5%, that is a much bigger increase because actually interest costs are actually doubling. So I don't know about you, but I'm definitely starting to hear some alarm bells for the housing market. But you know what I'm not hearing alarm bells for? Bitcoin. Now, while we're on the topic of Bitcoin, you're probably thinking, what is a reputable, safe, and cost-effective exchange or app to buy and sell Bitcoin and other cryptocurrencies? Well, that's where I'm proud to work with today's video sponsor, FTX. Probably seen many other YouTubers and iconic public figures like Tom Brady and Stephen Curry partnering with FTX, and that's for good reason. FTX is trusted by over 6 million users and is one of the largest cryptocurrency companies in the US. It's a safe and regulated way to buy or sell Bitcoin, Ethereum, and other digital assets. And the reason I love using the FTX app is because it's much cheaper than other exchanges, with no fixed minimum fee on transactions where other platforms normally charge minimum $2 to $3. There's also no ACH transaction fees, and you can also set up recurring buys directly from your bank account for dollar cost averaging strategies like I do, because nobody can time the market. They also have a great crypto-friendly debit card where you can spend cryptocurrency at millions of merchants worldwide. They also have a great section in the app where you can stay up to date with the latest news in the market so you can act quickly, and they also have a news feed where you can stay up to date with the latest cryptocurrency projects. If you're wanting to download the app, I'll put a link in the description. When you use code MICHAELCOWAN, you can start earning cryptocurrency for every trade over $10. Thanks for FTX for sponsoring this video. Now, back to the content. But people, this is just the tip of the iceberg. I've got much more alarming and worrying news. Look at this, everyone. This is the chart at the Federal Reserve of the average 30-year fixed rate mortgage. Now we can see here they hit a recent peak in November 2018 of almost 5%. And again, that's when we started to see house prices fall. Now we can see here they hit a low of 2.6%. But look at this chart here, everyone. Mortgage rates are going completely parabolic, and this is definitely a worrying trend we're on here right now. And remember, for every 1% increase in interest rates, home buyers' borrowing power gets reduced by 10%. So what that means is home buyers' purchasing power has dropped about 25% now. Plus, home prices are much higher, so they're already extremely unaffordable. Now, what is also happening is construction costs are absolutely skyrocketing. And people, we're starting to see what happened in China with their property market, with their construction industry, happen in America and Australia as well. Listen to this, everyone. Warnings as thousands could be impacted by construction company collapses. A building insider has revealed the shocking state of the industry, with half of construction companies in trouble and a terrible impact in store for customers. But that's not all. This is extremely worrying, everyone. We're starting to see the ripple effects from the Evergrande crisis and China's property collapse happen in the West now. And what's behind this is, normally, for example, say if you want to build your home, you may enter a contract and have the price fixed all the way up to a year. Now, normally material costs would rise pretty steadily, only increasing 3 to 4% per year. So it wasn't really a big worry for construction companies. But what we're seeing right now is something absolutely unprecedented, with material costs skyrocketing anywhere between 20 and 30% within a year. So now all of a sudden you're seeing these construction companies either having to tear up contracts or build these homes at a loss. So if you're going to build a home in 2022, you're definitely going to want to do background checks on the developer and the builder, because look what else is happening. Because here's the facts for you, everyone. New home construction costs are soaring at 22% as America finally starts building houses again. Now, if we don't see construction industry collapse, this could be good news for the housing market, because that means more supply coming onto the market will increase inventory, take the FOMO out of the market, and then hopefully prices will start to fall with simple supply and demand economics. But with the recent developments with what's happening with Russia and Ukraine right now, home builders are getting squeezed. Listen to this, everyone. American home builders are now getting squeezed by the war in Ukraine. Because what have we seen over the past 18 months? We've seen supply shortages, we've seen commodities skyrocketing, but now we have more lockdowns in China. Central banks were telling us that these supply chain issues will be fixed by 2022, but now it's looking like they're only going to get worse, and this war in Russia and Ukraine is only making commodity prices get even more expensive. And you know what? I really do feel sorry for people trying to buy a home right now, but unfortunately what I'm seeing is some people are going to make some very bad decisions. They're going to overpay for their home by maybe, for example, 10, 20%. They're going to FOMO in, and they're getting desperate. Listen to this, everyone. This isn't going to end well. Home buyers get desperate in overheated US spring sales season. Soaring mortgage rates and prices are fueling a rush to seal a deal in market where competition for houses is intense. And it goes on to say that people are paying $50,000 above the asking price, but that is actually the lowest bid. Simply, there's all cash buyers coming in, swooping up these homes, paying up to 20% above asking price and willing to settle within 2 weeks. So what you're probably thinking, oh, okay, what does all this statistics, data, and economic jargon mean for me in simple terms? Well, what this means is, everyone, there's a cycle for every single asset class. We've seen the peak euphoria in the markets in equities and risk-on assets like cryptocurrencies in 2021. Then we also saw growth stocks like the high-growth tech sector in stocks peak in 2021 as well. But since we've seen Bitcoin fall about 37% from its all-time high, we've seen growth stocks like the Nasdaq fall about 15%. I'm personally dollar cost averaging into these markets right now because it's definitely a much better deal than real estate, which is still at its peak. And the reason why house prices haven't fallen yet is because the housing market is very, very slow to react. It's not like stocks or cryptocurrencies where you can sell it at a click of a button and you get that data in real time to see how much prices are falling. For example, if someone gets the idea of selling their home, it may take them all the way up to 3 months to finish selling that home and settle. So once house prices actually begin to fall, it'll take us about 6 months for us to actually see that data. And many investors that may have had their money in traditional safe haven assets like bonds, well, they have now fallen about 18% in price as well, because remember, as yield rise, the yields are rising because the bond prices are falling. So if investors are losing money in their equity, bond portfolios, and cryptocurrency portfolios, when they're not going to have as much money to put on a down payment for a home or pay cash for a home. Now, this is not me predicting an imminent housing market collapse of, say, for example, 30 or 40%, but I do think we'll start to see moderate house price falls. And if the Federal Reserve does lift interest rates to, say, for example, 3%, if mortgage rates go above 6%, well, then that's when I think we'll see some real pain in the market. And I would not be surprised if we see a peak to trough in real estate by 15 to 20% if mortgage rates do hold above 6%. But everyone, like I've been saying, what I think will be more likely is the Federal Reserve will U-turn, they'll start printing money again. But this all depends on if the Federal Reserve does what it says it does and if mortgage rates can hold these levels. So everyone, that was just my thoughts and opinions on what's happening in the housing market. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Again, if you use my link in the description, code MICHAELCOWAN, you can start earning free cryptocurrencies for every trade over $10. Thanks for watching. I'll see you all in the next video.